Today in the grain market, soybeans were a little bit lower, but not before we started higher. I think there's some profit taking that came in to start the week, but we really did get up to 17.20, and that's just 21 cents off the all-time high that was set back just in February 24th. I think that's something to be watching as we go forward. It looks like that it's the last week of May, so it just seems that the market's moving around, and just that we ended up moving 20 cents lower is almost nothing at this point when we're above $17. We're talking about soybeans at $17, just like it's a casual number. The open interest in July and the options did increase, and I think it's significantly. 3,000 were added to the longs on the calls and 1,000 added to the longs on the puts. That means the traders are still willing to place down some bets before that July option expires in about 4 weeks now, so it's something to watch. The CVAL for soybeans is 22.4%, the oil is 30.1%, and meal is 25.3%. So plenty to watch there. Now, the corn did firm up today. The strong commercial demand that was indicated by the national index of cash corn is well below where the futures are. So that just lets us know that commercials are stepping in to buy there. That drought monitor has two stories, kind of what's on east or west of Nebraska, and pretty much like the Mississippi here. Certainly drought conditions on the west, on the east, it seems to be okay. That being said, a lot of money managers have sold out some of the longs on corn, but I think that that's just because we're moving into the summertime and there's so many issues that are surrounding all the grains as a whole. The option open interest in July, though, really jumped high. That's the biggest across all the grains. 7,700 calls were added to the whole complex for the July corn. That's significant, and they added 3,000 more to the puts. That just tells me that there's some expectation that traders are expecting a little more action, certainly in the next couple of weeks. That CVAL is at 30% as well. Now, the wheat was higher today too. That global weather is at the forefront of the market right now. I think that there's a decent turnaround from last week's real sell-off. Kansas City wheat is, the winter wheat is facing like about 60% drought. Even though that we're in the harvest, I know there's been some juxtaposition back and forth, but the real wild card is going to be what's happening out of Ukraine. Are we going to be able to get exports? Are we not? Are they going to be able to plant enough or not? So those issues, as soon as we can get a real number, then we can kind of add that to the market, but there's just a lot of unknowns there. Also, right now we've got freeze warnings up in upper Wisconsin and upper Michigan. Like the information just doesn't stop around here. Now, the CVAL for the July wheat is at 46.7%, but overall we're going to be turning to demand, and that's what we're going to be watching as we go forward. And of course, this is the last week of May. A lot to happen at this the final week before we really step into the June, July, and August months.